Welcome viewers to our Future of Nickel update for one-to-one mining investment Americas online. I'm very pleased to be joined by two experts in battery chemistry and the technologies influencing the whole battery metals complex. The 30 billion nickel market is supposedly 10 times larger in dollar terms than the lithium market. And with bold announcements from Tesla's CEO Elon Musk earlier this year, it's clear the appetite for efficiency and environmentally sensitive nickel projects is ramping up. So here to give us a snapshot of the sector and the key challenges shaping the future of nickel mining are Kimberly Berman, who's Analyst of Special Projects and Equity Research at BMO, and Sam Riggall, CEO of CleanTeq, which is a leading mining metals recovery and industrial water treatment focused company. Hello to you both. Thank you for joining me in your respective mornings and afternoons. And Kimberly, why don't you kick us off today with your nickel market snapshot, please?
Great. So I'm here today to just quickly describe on the battery chemistry side of why nickel is so important to the EV story. And I just don't want to take up too much time because I think that the nickel decarbonization is a very important point that is not necessarily part of the nickel narrative of these days and should be. So I just wanted to just quickly go over that, you know, EV market penetration has been going up for quite some time. And as you can see from like 2017 to 2018, we've seen that the curve has been steepening here. And obviously the bumps and the trials, they are just basically market, the way the auto sector works. And in 2019, we've seen, obviously, we saw a big dip, mainly because of what was going on in China. And that was partially because of, there was a multitude of factors, but it was partially because of the end of some of the Chinese subsidies. And, but more importantly, there was also, at the beginning of the year, there were many battery fires. There's some safety issues that are going on there. And so in my view, you know, there's a push to try and get high nickel battery chemistries on the road. And, you know, and it just went too fast. And battery chemistry is one of those things that you really have to take your time. It takes a while to go from benchtop to commercialization. And it was really, you know, poignant for me to hear Elon Musk actually say that in his talk on Battery Day, to say that, you know what, this is very, very hard. Scale up is very, very hard. And it takes time. So that's just sort of one of the first takeaway I just want everybody to know is that, you know, you can actually increase nickel, or you can say that you can decarbonize nickel, but there's a lot of steps that have to go into getting to that reality. So, so I just wanted to note that, you know, the high nickel formulations are the ones that are the top vehicles in the market. Tesla Model 3 is a low cobalt NCA, and they're going to be pushing cobalt out of the system. But for now, you know, the focus is definitely, you know, pushing that nickel higher and higher and higher. And as you can see that, you know, like the BYD Quinn Pro, BYD uses LFP, which is another chemistry on the market. It's more entrenched in the Chinese market. However, you know, outside of China, it is a high nickel story. So what we see here is that EV growth is based on a confluence of factors. Obviously, the supply of key raw materials is very, very important. And Sam will talk about that in a moment. But, you know, we also need economies of scale. And again, what happened at Battery Day is that they're talking about some interesting things about trying to fix the process and make it more integrated. Another presentation that was made at the International Battery Conference recently was that, you know, that the Nevada plant has been able to build its 2 billionth cell. And so that's a lot of capacity. It's a lot of years of trying to figure that out, of trying to be able to streamline all of the manufacturing and all of the processes. So that's very, very important. There's obviously some technological limitations, and I'm going to go, and that's more on the nickel and the cobalt and the other elements that are part of the cathode chemistry. And obviously there's the key raw materials. And so everything that we talk about on the government and on the OEM side, this is very, very important. But at the base, it's always these three things that need to be figured out before any of these things, like any mass market EV penetration occurs. So it's policy driven. Europe is obviously the most aggressive, and they, as of I guess September 2019, the European market has been going gangbusters. And part of that is because there is a mandatory target of 95 grams CO2 per kilometer starting to be phased in 2021. So this is an astronomical thing that could happen. And I think with the COVID shutdowns, they were trying to lobby to extend that, but that's just not the case. So you've got that element, and then you've got also the China's problem with trying to curb that pollution issue. And another thing that's been happening over the last year is that the China 6 is now going to come into place. The China 6 standard is actually more stringent than the Euro 6 standard. And this is now coming into effect January 2021 nationwide. They gave a 6-month reprieve only to get rid of China 6A and China 5 vehicles. And what we're hearing is that, people just don't want the pre-China 6 vehicles because they don't know if they're going to have fines every year or what exactly is going to happen. So there's a lot of stuff going on in the auto market that is going to be, that's going to be settled over the next year. But, that's part of it. We're going to see some ramping up in demand, and we're going to see some ramping up in production capacity for EVs in China over the next year. So just to go back to what I said about, as of, September of last year, we see that there's like the purple line here. We see that there's all of a sudden this ramping up in Europe. Part of that is because there's been a lot more variety of EVs, and that was a huge issue in prior years. And that was the chief complaint. As you could see, April and May, that's really nominal compared to the overall auto market in Europe. So we see June, July, August, we're just seeing this huge pent up demand going on. And one of the things that, like I said, what I said before is that OEMs are being forced to take EV seriously. So this is a great chart that was done by PA Consulting. And it just shows that, based on 2018 CO2 emissions of their average fleets, of what their predicted fines that they're going to get when this regulation comes into effect. And you can see, like, Volkswagen, 4.5 billion. These are huge fines that they're facing if they don't sort of ramp up that zero emissions vehicle repertoire and start to get them onto the road. And another bottleneck in Europe is obviously it's the amount of Gigafactories. So these are just being built. And I just wanted to point out here that Tesla's Model Y production starting in Berlin in actually 2021. There's a really great video of it from B1M, and I really encourage anybody to take a look at it. And it's about how quickly they can actually build these factories and what they actually did in China. And so I actually believe that they're going to be up and running in 2021. That said, that's going to be the Model Y. It's going to be Model Y production. It's going to be a new vehicle. It's going to be a testing ground. So a lot of the things that they talked about in Battery Day and that they're doing at their pilot plant is going to be tested at this factory. And that's just smart in a lot of ways. And this is where a lot of the battery capacity is going to go into place. And I think that everybody needs to watch what chemistry is going to be the dominant chemistry. It's probably going to be an NMC. I think it's going to be a zero cobalt NMC. We'll see. But once that capacity over the next 5 years is in place, then it's going to be very hard to change that. The bottom line is that nickel is going to be the star. So here we've got all these aggressive targets, and these are the key suppliers, and all of these companies here can do high nickel compounds. When you look at all of these companies that have all these different types of, like, LG Chem, for example, has different types of partnerships here. It's important to just look at these companies as a way, everybody can do NMC, anybody can do NCA and LFP. It's how they bring this all together. And so it's how they bring that puzzle together and how efficient that is. And that's what makes them the better candidate. And that's what differentiates them. But they all have the basic tools. So, and China, like I said, very bumpy road in the last year for all of those reasons that I had mentioned. It is all coming back now. So we expect that everything's going to just sort of settle itself out closely. And just to give you an idea of what kind of, they've been, this on the bottom chart here with all of the subsidies, this has been very methodical. And so last year when they had that big, downturn in EV sales, I was just wondering what exactly happened here, because this was actually expected. So so the key things is that, obviously that was pretty aggressive. That hit, it was the China 6, and it was those mandatory safety considerations that are going to be put in effect as of January 2021 as well. So, and then US is just, not really a non-event right now. It's just all about Tesla, and they also release their numbers down on a quarterly basis. And so it's just been not as the uptake there has not been as aggressive as we thought it would be, given that Tesla is a homegrown success story. And I just wanted to turn the page about why nickel is important, why that, a lot of that capacity that's going to be built in Europe, and why that's going to be high nickel of some form, but it'll be, nickel is going to be part of the game, is that, so we're looking at the cathode side here. And for one thing is that, we only have like a few cathodes that have been already proven in this system. And once you start changing anything, so if you change, even if you raise nickel content a little bit and tweak it just a little bit, you may have to change the electrolyte, because the electrolyte doesn't play well with that new cathode formulation. Or you might have to, switch out the graphite anode. For example, if you use a combination that's lithium, manganese, and nickel for the cathode, you can't use, it's just the voltage is too high for the anode to be used. And so you'd have to switch out the anode to use perhaps a titanium anode that's a little bit more expensive. So you have all of these, things that are going on, and you can't just tweak one system. And I just wanted to step back because, for the battery day, at the battery day, I always felt like, that the key message there was that there's all of these things that are happening within the battery that need to be improved. And Tesla does not have, it's a no risk, proposition to just throw everything that they have and try to improve everything at once and try to figure out maybe that there's a better way of doing something. So even if they don't get they don't achieve all of those things, they're going to achieve something, and they're going to achieve that, I believe they're going to achieve that zero cobalt, high nickel formulation. But we'll see how, what happens with the Model Y in Germany. So the perfect cathode doesn't exist. I use this slide all the time. It's very useful. And just to take a look at all of the parameters. So the key ones is that, NCA is what Tesla uses, and that's like nickel, cobalt, aluminum. And the rest of outside of China and in the higher end vehicles, they use NMC, high nickel. They're trying to push nickel higher in both formulations. And we're finding that there's actually like a convergence between the two. So people are actually doping, they're actually replacing, cobalt in the NMC formulation with aluminum, because they kind of interact in the same way. So So just to give you, you know, what the issue is with nickel. And so the last thing I just wanted to talk about was that, you know, nickel's the star. It's going to be the star. It's definitely something that, you know, it just the performance and the, you know, so if you have an LFP, for example, and you increase the battery capacity, then you're going to increase vehicle weight. And there's all these other trade-offs. So nickel has actually, you know, been quite a very formidable element to replace. And so what happens earlier on in research was that, you know, they saw nickel, they tried to do nickel only cathodes and they just exploded. So then they just sort of add things like manganese and cobalt and aluminum, and they're trying all these things. And so I view nickel now as that's the star. Nickel's the star. Cobalt, you know, manganese, aluminum, all these other elements, and even iron. There's they're doping, they're switching out cobalt and adding iron as well. So it's an NFA. It just, all the other elements are basically trying to keep nickel from getting into trouble. And so what we see here is that this is a perfect chart. It shows it very beautifully how all of a sudden, as nickel increases, you know, the thermal stability goes down, the longevity goes down. And why is that? So what exactly happened there? At first, I think the scientific consensus was that when the drop, you know, when cobalt came below the 20% mark, it would stabilize the system. And so this was actually where the circle is. That was where the industry sort of focused on. And they tried to get to the NMC 811. They tried to get into these other elements that were not as stable. So you just sort of have to see it that if there's, you know, you look at this chart and it's like, okay, there's so many things that are going on as you increase nickel. So manganese, cobalt, all of these things, again, are trying to keep nickel out of trouble. And the main problem is that once nickel competes with lithium, so it basically competes with lithium within the system. And so, you know, these cathodes are intercalating, so they go in and they go out as you charge and discharge, and that's how the battery functions. But the bottom line is that nickel will actually like go into the holes where lithium's supposed to be, and it closes the holes. And so then there you've got the structural decay, and they call it, you know, cation mixing. They call it, you know, they just basically call it the mixing problem. And so it becomes more pronounced. And then obviously you go back to that original chart and you see that's why it goes down. So just to, you know, we've been talking about, you know, NMC 811, we've been talking about the why cobalt's needed in the system for a very long time. But the real discussion around removing cobalt started with, you know, Jeff Dahn's work on removing cobalt from NCA cathodes. This was actually the star that I thought was actually the big thing that was supposed to be at the battery day, but he actually just, you know, Elon Musk just basically said it real quick and then moved on. But, you know, they basically were able to switch within the NCA. They were able to switch cobalt with manganese or magnesium. But I think that's going to be an NMA. What they're going to be working on is basically a nickel, magnesium, and aluminum cathode, but we'll see what happens. And also, you know, the top minds in the field have been solving this, what they call this unavoidable nickel problem, and why aluminum is key. And basically, like, this is a very, very interesting paper that came out, and it was talked about at quite a great length at the this problem was talked about by Jeff Dahn at the International Battery Seminar. And it basically was found that, you know, NCA cathode cycling stability was improved with increasing aluminum content of a maximum of 5.6%. And whether that is going to be able to completely replace cobalt's ability to stabilize nickel, we don't know. But this is actually pretty interesting. And there's a lot of, like I said, top minds trying to get cobalt out of the system. But the bottom line is that it's all about trying to tame nickel and trying to find that element that can tame nickel the same way cobalt has been able to do that. So finally, I just wanted to just say, I know I mentioned it before, but I wanted to, there's been a lot of talk about LFP and whether that's going to just take over nickel as the star. Right now, Tesla is outside of China and outside of Asia is going to be working with NCA. They're not going to abandon it anytime soon. And the nickel, they even said that it's going to be a high nickel, zero cobalt formulation that they're going to go forward with in the Model Y. But I just wanted to note that, even if the issue is that, you're going to have more weight in the vehicle. Less pack density, more weight. That's basically, it's not a perfectly linear relationship, but it is definitely something that you have to always keep in mind. And although they're improving it more and more, I don't see it coming out of China. It's already deeply entrenched in China. We never thought it was going to go away. Our numbers have always been very clear that it was not going to go away. And so we did up our LFP market share to 25% for 2025, just up from 2020 levels based on the announcement that Tesla is going to move to LFP. But it still has, again, it's definitely something better for nickel, not so good for cobalt. But even with this change, we have, and basically this is our makeup that we kind of see going forward. This is our new base case, as well as we have a downside case for cobalt. And our downside case basically says, let's say if that NMA technology comes onto play, or even an MFA comes into play, we still have upside for both cobalt, and we both have and definitely some upside for nickel. And I think that our downside case for nickel here is actually quite conservative. We just don't know if there's going to be any non-nickel, non-cobalt formulations coming into play, but it's also wishful thinking because it takes a long time. So that's it. And with this, I'm going to turn it over to Sam. I hope we could solve that decarbonization of nickel problem.
Thank you, Adam. Thank you to 121 for inviting us to make this presentation today. And thank you to Kim in particular. That was a very informative and excellent introduction to what we're going to talk about today. I've been asked to talk to the cost and carbon impacts of mostly nickel, but I'll also touch on cobalt in the supply chain for electric vehicles. This is an extremely important issue because both cost and carbon, certainly in our experience in engaging with car makers, has been the number one or number two issue that they would like to see more transparency on. So why are we talking about this? I've put some headlines on this slide to talk about what we are seeing in the evolution of automotive supply chains. And make no mistake, automotive supply chains are being torn apart and rebuilt from the ground up. And that's really as a function of what we're seeing with electric vehicles today. Car makers are now having to look at different capabilities in how to deliver what are quite technically complex chemistry projects into the market. If you think about what a battery really is. The headlines there indicate that we're seeing something now that hasn't been seen for a very long time. The two ends of what are a very long automotive supply chain are having to work cooperatively to ensure that there is enough metal to supply the batteries that are going to be needed for the electric cars of the future. Very unusual to see the mining company and automotive industries engaging directly. But this underlies a couple of issues. One is this is not just a question about availability of metal supply and making sure it's there for the batteries when needed. There is also a much bigger risk inherent in this supply chain, and that's around pricing and price risk. I'll talk about this a bit later, but price risk, in my opinion, probably represents the largest risk to a car manufacturer in this supply chain today. And I talk about the pricing risk for the metals, the raw materials. I've given an example here on this slide. A move in nickel and cobalt prices back to historic highs will add about $35 a kilowatt hour to a battery pack, which doesn't seem like a lot in the scheme of things, but when the industry is targeting $100 a kilowatt hour as a competitive cost to compete with internal combustion engines, that $35 a kilowatt hour erases approximately 5 years of cost reductions that have been earned through building this industry through economies of scale and technical innovation. So just putting the price risk in context, it has the ability to undo a lot of good work that has been done over the last 5 to 10 years. Put that also in the context that most mining companies invest in metals for the price volatility. They don't like signing fixed price contracts. And the volumes of metal we are talking about here aren't easy to hedge. The question then becomes, how do you build a cost-effective and reliable supply chain that meets the needs of the automotive industry? Let me talk a little bit about geology, going back to geology, because I'll look at this question through the lens of a mining company. There are two types of mineral ore styles that the world is familiar with. There are the traditional reliable nickel sulfide resources, and then there are the nickel oxide resources, what we call the laterites. And as you can see, dating back 20 years ago, we were already starting to see the steady decline of good quality sulfide resources. They're geologically scarce, and the world is becoming increasingly dependent on nickel oxide and nickel laterite resources for delivering nickel units into the supply chain. As Kim noted, nickel is the star. Battery chemistries and technologies are intimately dependent on nickel in these cathodes to deliver the energy density that is required. And most of the nickel in future that we foresee coming to this market will come through mining of nickel laterite resources. The mining industry has to develop much better capability in delivering these projects. It's had a mixed history, but the important point to note about this slide is that nickel laterite development is not only costly, but it's time sensitive as well. So on cost, we're looking at about $50,000 to $60,000 a tonne capital for new nickel capacity in the laterite industry today. And what that implies is that you should expect nickel prices to rise considerably in the next few years. The time dimension, though, is important. As Kim noted earlier, if you go and have a look at how quickly these battery plants, cell manufacturing plants, pack assembly plants are being built, they're sprouting like mushrooms very quickly. Contrast that with how long it takes to build a typical laterite mine. On average, we've seen in this industry about a 7 to 10 year time lag between feasibility study and first production. So it's not a question in my mind of whether there will be enough nickel metal. That decision, I think, has already been made. There won't be unless the industry really starts putting projects into construction today. And there are very few actually in the pipeline that are in construction as we speak. The other challenge with the nickel industry, it's very complex. A lot of different products go into different applications. And the key point I would make here, looking at all these different nickel products that can be sold into the market, is simply to note that the battery industry requires a very high spec product. The one you see down the bottom right, which is a nickel sulfate, that's the typical form in which nickel is supplied to make cathode for the battery industry today. Has a very, very high purity. You can see there 99.94%. Compare that with an LME grade nickel powder that you see to the left of it, 99.8%. You still have a very significant impurity removal challenge ahead of you, even with LME grade nickel. The products on the left, the two left, nickel pig iron and ferronickel, are the major feedstocks for the stainless steel industry today. A lot of impurities in them. They contain a lot of iron, which makes them attractive to the steel industry, but not used for nickel production that goes into batteries. And when you look at nickel cost curves, bear that in mind. Well over half the nickel cost curve today is this form of nickel. And to understand the challenges for the automotive industry, you need to focus on those products that are actually available for use in batteries, and there are only a few of them. MHP and MSP are produced from the nickel laterites I've discussed and talked about. Matte products and LME nickel powder generally are produced using nickel sulfide resources, using pyromet processes. You can see this Sunrise Eluate. This is our project. We've elected to keep our nickel in solution for the simple reason it's much easier to remove impurities when you're in solution than when you're in solid state. So, and I'll talk a little bit about that, but the point to note here is that the specs for battery grade nickel and cobalt materials are very, very high when they go into the battery industry. And therefore, it becomes a question of what does it cost to remove impurities from your feedstocks. This is a graph I sometimes show to just illustrate this point. Bear in mind the graph here is on a logarithmic scale. So taking 100 tons of laterite ore on the left bar here, grading 1.5% nickel and 0.075% cobalt, you can see with the ore out of the ground, you've got in 100 tons of ore about 1.7 tons nickel equivalent saleable metal, and the rest of it is impurity that needs to be removed. And as you go through the nickel pig iron and ferronickel, you're gradually removing impurities. You get down to your MHPs and MSPs, again, further impurity removal. Your matte and the eluate that I talked about that we're looking at, and then eventually to an LME grade nickel. But even when you get to that LME grade nickel, you've reduced 100 tons of ore to 1.5 tons of metal. You've still got about 3 kilograms of impurities with that LME grade nickel, of which over 2 of those 3 kilograms still need to be removed to get you to a battery grade product. So impurity removal is everything in this business to get you a product that the automotive industry and the battery industry can use. And therefore, it's really important to understand what those impurity removal steps look like for each of these feedstocks and what the carbon impacts of those impurity removal steps look like as well. And that's what we've done. One of the challenges with Tesla's Battery Day was that there was some terrific aspirational ideas about how you can change the raw material supply chains to deliver better value. The challenge was that there wasn't a lot of detail around those discussions, and that's fair enough. People need to go away and think about how things can be done differently. But we wanted to give people a sense of taking these different feedstocks and what they cost. What does it cost to move them around the world? What does it then cost to convert them into a product that can then be used in a battery or an electric vehicle? And so we've taken 3 products, an MHP, a metal powder, and a sulfate here. We've looked at what they cost. So on the left side, the cost is what it takes to buy them on market today, and what the greenhouse gas impacts of producing those feedstocks are. And then you can see the volumetric mass of material you need to move. For every ton of metal powder, which is pure nickel almost, you need about 5.6 tons of MHP and about 4.6 tons of nickel sulfate. And therefore that impacts your transport costs and your greenhouse gas emissions again. And then ultimately the impurities that need to be removed out of these feedstocks feed through to the cost of conversion and the credits you can receive from these products. The key point to note about what is a very busy slide is that when you look at the final delivered cost on the right-hand side for all of these feedstocks, it's pretty similar. You're talking pennies in the pound. So the market, as you would expect, operates pretty efficiently. It manages to price raw materials effectively so that there are no arbitrage opportunities really between these products. It's somewhat different though for the greenhouse gas impacts. In general, the higher the impurity level in the feedstocks you're using, you're going to be chewing up more carbon and producing more carbon, I should say, in converting it to a battery grade product. And so, when you look at, for us, the cost and the carbon impacts, we believe that sulfate is an optimal product for this supply chain, simply because we sequester a lot of the cost and the carbon footprint at the mine site in producing this there. And you have almost no conversion costs at the battery plant or at the automotive plant, wherever you're sending this for processing, because it is already in battery grade form. You've hit a purity level that is sufficient for producing batteries. I would say also sulfate, you get a credit. You get the sulfate units, which when added to water create acid, which is what these other products need to buy in to both dissolve them and then extract the metals and the impurities separately. So key point here is that there's probably little impact on cost. There is a material impact on carbon that needs to be considered. Of more interest to us, though, is how do you make this entire supply chain more effective? And one of the cases we've looked at is taking our Sunrise project and what would be the impact on cost if you integrated that through ownership in an electric vehicle supply chain. So if you look at that bottom line and what that change does, it's fairly significant. You almost halve the cost of nickel into the supply chain. You get a very large credit in cobalt coming out of a nickel laterite like this, which can also be used in the battery. And you significantly drive cost lower. And when you convert these cost savings to dollars per kilowatt hour, let's have a look at what that translates to. And we've done this here under 3 different pricing scenarios. We've looked at if a project like Sunrise was owned 100% within an automotive supply chain, at spot prices, what would the savings be today in cash procurement of nickel and cobalt? What would they be under incentive prices, and what would they be under historic high prices? And you can see there that the cash procurement savings are extremely large. In battery pack savings, those translate through to very, very significant savings. And while the cost impact for a car doesn't look large, when you multiply those numbers by many millions of cars that are being produced by an automaker, our view is that in the long run, without controlling nickel and cobalt costs, there is no economic electric vehicle strategy. It will not surprise me if in the next few years you will start to see automakers and battery manufacturers thinking about how they can control this enormously significant risk in their supply chains. And this isn't new. This is a déjà vu moment for us. This was the world's first Gigafactory. This was Ford's Rouge plant on the River Rouge. And this was the largest industrial plant, manufacturing plant operating in the world for many decades. It was fully integrated through to raw material ownership, iron ore mines, steel making facilities, rubber plantations, cast houses, rolling and stamping mills. When you talked of the United States strategic critical mineral stockpile in those days, this was it. It was the Ford Motor Company. They brought more raw materials into the United States for manufacturing than any other enterprise did for many, many decades, and allowed Ford to be successful in ramping up what was a relatively new technology very quickly and maintaining industry leadership was that he controlled his supply chain. Now, over time, a number of those raw materials matured in their markets, supply grew, and progressively, as we've seen in the automotive industry, it's become a move from controlling raw materials to just-in-time delivery. And maybe that's in the long run where battery materials will head also. But we have been here before, and car makers need to be extremely aware that to deliver a successful electric vehicle strategy, it's not enough to hope simply that your suppliers are going to be able to supply these materials when needed at the right price. Let's dig a little bit just deeper into carbon quickly. When you look at the entire supply chain of delivering a battery pack into a car, this is roughly what it looks like in terms of carbon emissions. Let's focus on the middle bit, the active materials. They're the precursors and cathode materials. There's cell production, there are packs. Most of these manufacturing processes are easier to control when it comes to carbon outcomes. And I say that because already we are seeing manufacturers insisting that their cell suppliers run their manufacturing plants from renewable power, for example. There are there are ways in which you can quite simply substitute a fossil fuel source of power generation with a renewable source in these manufacturing activities. That's less the case with mining, and sometimes that's just a function of the geography of where the project sits. Sometimes it's just a function of cost and technical challenges. But what you can see from this chart is that the bulk of the carbon emissions to get to the final battery product come from mining and refining and processing of raw materials. And that range there, 31 to 103, is very large because of nickel and cobalt. Nickel in particular is the most carbon intensive of all the raw materials in this supply chain, and it leaves the largest carbon footprint, as I've noted there. Depending on your source of nickel and cobalt, so going back to our feedstocks, MHP, ferronickel, nickel pig iron, LME grade metal, the nickel and the cobalt can make up between 20 to almost 60% of the carbon footprint in a pack, a battery pack. So car makers need to be extremely careful about how they decide they want to source these raw materials and bring them into their supply chain. How do we, as a mining industry, address these challenges? And I'm not going to spend a lot of time talking about Sunrise, but I want to give you a sense of, in just a few slides, how we've thought about this problem. And this is based on feedback we've got directly from the automotive industry over the last few years as we've gone through the design phase of our mine and process plant. Cost is always the #1 consideration whenever you speak to a car manufacturer. And using ion exchange in our process, which is a proprietary process that CleanTeq uses for many metal extraction plants around the world that we build, we will be extracting nickel and cobalt selectively, keeping it in solution, and then putting it directly into purification circuits for purification to battery grade material. This allows us at the mine site to avoid third-party refining and shortens the supply chain from the mine to the automotive facility. We're very conscious around carbon. We will have one of the lowest carbon footprints in the industry. The project will be connected to a renewable source of power. A bit over 50% of our power is generated on site through cogen. We manufacture acid on site, which is extremely exothermic. It will produce electricity and steam for our operation. And a bit under 50% comes from what we plan to build as a combination of solar panels, the solar farm next to the mine, and also grid-sourced renewable power. So it will be, as far as I'm aware, the first fully 100% renewable power-driven mine and processing plant in Australia. We've also thought very hard about recycling. This is another area that the automotive industry is going to need to manage. Our refinery is capable of taking back spent cathode and recirculating it and recovering the metals. So we intend to take back what we produce long term and use an effective recycling process to do that. And then finally, lightweighting, as Kim mentioned, the batteries is a really important consideration for the performance of these vehicles. Sunrise is the largest scandium resource on Earth. Scandium makes aluminum lighter, stronger, corrosion resistant, and more formable. And we believe it has an enormous potential in the automotive and aerospace industries of the future. And this is what a modern metal or battery metal process plant of the future will look like. This is Sunrise. It's basically 3 circuits: a leaching circuit, a metal extraction circuit, and a refining circuit. The link to our webcast, which we delivered on our Battery Metals Day a few weeks ago, is there if you want to see that. But just to make the point, this plant will support over 1 million electric vehicles a year. Roughly, the nickel and cobalt out of this is enough to support Tesla's Gigafactory in Nevada at a negative cash cost because the cobalt credits here are so large, and it has about a 50-year mine life, so it's an extremely long life operation. Phase 2 in looking at cost savings for this industry are probably going to be driven through how we remove crystallization and separation processes, what we call a direct-to-precursor approach. And that's certainly a piece of work we've kicked off already, and that will be also incorporated. Maybe one last point, I know time is short, but on cobalt, certainly in our engagement with the battery industry, at least in Europe, we are seeing very little desire to remove cobalt completely from cathodes for a couple of reasons. One is that the current cathode chemistries have got cobalt concentrations now to such a low level where it is not the biggest risk anymore to the cost of a battery. Nickel is by far the biggest risk to the cost of a battery today of all the raw materials that sit inside that cathode. People have lost, I think, sight of the fact that in their haste to address a lot of the social and reputational issues that cobalt brings, that we've just rearranged the deck chairs on the Titanic. Cobalt now doesn't have as large an influence on battery costs as it did a few years ago, but nickel certainly does. The other aspect also is I think that you're seeing a lot more comfort, certainly in Europe, about the way miners are trying to certify the cobalt supply chain, but also technical issues. Bear in mind, Kim summarised very well the challenge with cobalt and removing it and the stability in the cathode. Technical issues are one aspect. There's a lot of thought also being given to the legal aspects, and you're starting already to see a number of car manufacturers enter product recalls for battery packs. Overnight, we've seen a few articles on BMW and Hyundai doing the same thing. This is a very extremely costly exercise. It's not like a defective airbag or brake mechanism. You're talking about battery systems that cost many thousands of dollars to install in cars. So product recall, safety and warranty claims are front and foremost, and who wears those risks is still an issue that needs to be resolved in the supply chain. So I'll leave that there. Thank you very much.
Excellent. Thanks very much, Sam. Thanks for taking us through your presentation. That's great stuff. I just got a couple of questions if we could delve into them relating to some of the points you've covered. Wanted to go back to what you were saying before about owning the supply chain and some of the OEMs or automotives doing that. Henry Ford, a great example there. But just to play devil's advocate here, didn't Ford run into some challenges eventually with the logistics or with the process of controlling too much of the supply chain? And with that, what do you see as perhaps the biggest risks or hurdles that OEMs and automotives are experiencing now in order to get to that level of control over the supply chain?
That's true. The Ford's exercise and integration had some winners and some losers in some of the commodities it selected. At some point, it was the world's second largest steel producer and iron ore supplier. So it in the early days, certainly the steel making was important. I think when you look at rubber, it was less successful. But as Ford made the point, owning a lot of South American rubber resources encouraged the Southeast Asian rubber plantations to open much more quickly. So, I think you have to think about also how the supply chains for each of these commodities evolved. There's absolutely no doubt that car manufacturers do not want to be mining companies. They don't want to be in the business of extracting minerals. It's not their competency. And that's why I think longer term, you are going to have to see much more collaboration and partnerships between the mining industry and the car industry to really drive costs lower. The cost savings that we have seen over the last decade with lithium-ion batteries aren't going to be replicated in the next decade. We've driven significant savings out through economies of scale. We're continuing to drive significant savings in the quality of the cathodes and their energy density, effectively less metal for the same unit of energy storage capacity. But eventually those gains diminish, and therefore you have to look really hard across the supply chain to understand where are the inefficiencies. And that is Tesla's point. Where can we find low-hanging fruit in these supply chains? Our view is that a lot of that is going to have to be found in the way the different products interface along that supply chain. And as I said at the end, a direct-to-precursor approach is probably a very smart way of finding significant savings. But supply is one thing. You need to manage the cost of these raw materials into the supply chain, and it's very hard to do that without owning them.
Yeah, certainly. So how do you think in the short or near term manufacturers and automotive companies might deal with this volatility in nickel price, or perhaps rising nickel prices?
Well, I can only go by my experience. Yeah, right. I can only go by my experience in discussing this with car companies. Usually the first demand on the table is a fixed price long-term contract. So they want to remove pricing risk. I think the reason you're not seeing lots of large long-term nickel and cobalt offtakes announced is simply that mining companies aren't prepared to accept those terms. Our investors invest in mining because they want the price volatility. So at some point, something is going to have to give. And I think the next few years are going to be a very, very rocky road for procurement groups in battery companies and car companies as they look around the world at where the nickel is going to be produced. Even if you can find the nickel, you're not going to be able, in most cases, to lock in price for long periods of time. And secondly, it may come with a large carbon footprint tied to it, depending on how it's produced. So, what we are trying to do with Sunrise is present a template for how you should do this from the ground up, and try where possible to integrate as many of the production processes at one site in one facility as possible. So you're not inefficiently shipping large volumes of material around the world, having to redissolve it in acid, applying new conversion processes to get it out again. It can all be done much more efficiently. We just need to build one or two of these plants to show how it's done.
Yeah, certainly streamlining that process and building the efficiency.
Yeah.
Last point I wanted to ask you was, and maybe Kimberly can chime in as well if relevant, is around the very end of the cycle, recycling, which you touched on as well. What are some of the developments that are going on there? Is this an area that's getting ramped up? Because as far as I understand, it's a very small fragment of the materials industry, let alone the nickel space.
So this has been going on, and I've seen recycling as, a lot of these scientific conferences that I go to, I've seen recycling becoming much more talked about, as topic, and it is very important. It's very early stage, unfortunately, and nickel and cobalt recycling presents a lot of challenges that need to be overcome. However, we're seeing, like on the lithium iron phosphate, we've got like at least about 10 years of recycling in China that they've been able to do with that particular chemistry. And another thing I just wanted to point out is that, lead acid batteries, that is the #1 circular economy in the world. Okay, so that's been solved. And it wasn't because of, this was solved in the 1970s and 1980s. This was not a environmental type of narrative here. It was basically a profit, it was more profitable to try and, instead of disposing of lead, because we knew what lead was, it was one of the first, it was one of the first elements that were banned, and, lead acid, like lead paint and things like that. And so it had to be disposed of a certain way. And it was just not profitable enough to mine it and dispose of it and all that stuff. So they had to figure it out, because otherwise the batteries would be too expensive. And they were able to do it, and it's the perfect circular economy. And so battery chemists all around the world, they have these amazing, they've been able to perfect, lithium carbonate's used in LFP. They've been able to perfect that element of it. They're working on doing it larger scale. So it's just this step process, but they haven't been able to, like, when I look at the research on recycling nickel and recycling cobalt at this point, there's too many methods that are being discussed. So that just means that we're just really base case. We haven't figured it out. But there's a lot of very bright minds working on it.
Yep.
Yeah, okay, I would say when you're talking about recycling, you need to think about two activities. One is the mechanical aspect of recycling, actually pulling the batteries apart. That's actually the most costly bit, because not every battery will be constructed the same way. Sometimes it's just going to be better to put these things into a big grinder and then find a way to separate the material separately that way. But then there's the chemical side, which the chemical side actually is the easiest part. And nickel laterite projects like we're building at Sunrise are well designed to take spent material and recover the metal very selectively. You may lose some pieces, whether it's graphite or lithium, but certainly with most of the major base metals, copper, nickel, cobalt, aluminium, you can pull them all back out very selectively. I'd much rather be taking pure metal in a cathode than mining 2% ore and putting that in my plant. So we see a very bright future for recycling with these operations that need to be built, because they are really designed very well to handle those recycling loads.
Okay. My final point will be on the news of a solid state technology coming through, and how disruptive you think this would be. There's been a lot of hype, particularly around the VW's partnership company, Quantum Scope, I think it is, and they're launching. But as far as I could see, there wasn't actually much tangible information around the technology being commercially viable yet. More about the company's development itself. Do you have any views on that, or when that might sort of start to show disruption to the lithium-ion battery space?
So, solid state, the main thing that we did some research on that about a year and a half ago. We took we just basically looked at all the myths, right? And we just said, okay, just basically like all the claims, and then we just said it was whether it's a myth yet or if it's actually got some validity. And I think the bottom line is that it has to come down to cost. If these materials are very complex, they're not, and we don't know what the electrodes are going to be, right? So a lot of the solid state technologies that are out there are cathode agnostic, I call it. They're obviously going to be using probably the same ones that are already commercialized as a stepping stone. So you're going to see some high nickel, definitely some high nickel in the first generations of solid state. But it comes down to cost. Yes, the battery pack will be safer just because there's no more liquid electrolyte to be flammable. So you take out that element out of the equation, so that will bring the safety into place, and the batteries will be smaller, and the energy density per cell will be bigger. That's just that's the claims. That's the reality. That's exactly what could happen. But whether that solid electrolyte material is going to be cost effective and make those battery costs go down, that's still something that we have to assess. So we just have to get something that's there, and then you have to scale it up. And these materials are very difficult to scale up. And just remember what Elon Musk even said with scaling up technologies that are even, that we have the knowledge about. It just takes time. So I would just be very reticent. I love these breakthroughs, but these things take time, and cost. It comes down to costs and application, right? So if this is the technology on the road, this is the gigafactories that have already been built. We're going to see that this technology, this chemistry, that cathode chemistry, at least for 10 to 15 years through the design life of the vehicle.
Yep. Okay. Excellent. Sam, do you have anything else to add on the solid state at all?
I think it's a very long way away if we ever get there. I think when you look at the disincentives now in place for pursuing new technologies, is simply a function of the sunk cost that's already been put into NCM, NCA, standard lithium-ion batteries. There's tens of billions of dollars being invested across the supply chain, and that'll be hundreds of billions of dollars in the next few years. So the incentive to move away before we've even perfected the current technologies is going to be pretty limited.
Yeah, certainly. It's factored in.
I just want to add that, just remember that, okay, I've just been telling this to my kids, is that there's an entrenched technology. There's an entrenched technology. It takes a long time to remove that entrenched technology, even if you bring in up with something that's better. So we can say, even though we haven't perfected the lithium-ion battery, it's pretty much entrenched.
Absolutely, yeah. And the capital's already deployed and development underway. Makes perfect sense. Okay, well, fantastic. Well, look, that's been really insightful, and we're at time now, so I'll say thank you very much, Kimberly and Sam, for presenting for us and taking some questions. And that is the Future of Nickel Insight for 121 Mining Investment Americas, available on demand. Thank you very much, guys.
Thanks.
Thanks,
Thanks.
Adam.